Hi everyone. It looks like most people have joined, which is really good. And yeah, I'm Sam. I'm the senior account manager here at Futrli. And today we're going to be running through how to model multiple scenarios for the new normal. As you can see, I am obviously working from home, as I'm sure most of you are. So if my little dog that does like to bark at things start barking at things, I do apologise. I have to tell my wife to make sure he's under control. But yeah, hopefully nothing goes wrong. Touch wood. If the internet does drop out for whatever reason, not that it has, I've given a kiss of death there, then I'll just restart it. So yeah, normal sort of protocol. Hopefully it should be all good. If you've got any questions as we go through this session, then by all means use the Q&A function in Zoom. Probably come to those questions at the end. We might not need the full hour. I'm looking at maybe 30-40 minutes of content and maybe like the last quarter of an hour or so of Q&A. So by all means, ask questions as we go along. If I think it's right and we can kind of address it then I will, but I'll probably likely look to that at the end. And yeah, after the session, I will be sending out a recording. So if you do miss anything, I'll be sending out all that material. So you should be all kind of good to go on that. Cool. So if I share my screen, we can then have a little look at Futrli. Cool. So hopefully everyone can see that now. And this is just simply Futrli dashboard upon logging in here. So if you first log in, and if you haven't worked with a client yet, we just want to come to this organizations tab, and we want to add that organization. That will then sync away and then connected. We can then go and work on that client. So because obviously today's session is mainly on the forecasting, so building multiple scenarios, we need to jump to the forecasting area. So here, we've then got a list of all of your clients that we connected up. For ones that you've built a scenario for already, you'll see that we've got 3 scenarios, for example, for Real Story Productions Limited. And we can either open it up and use a scenario you've already pre-built, or we can build a new one. So when you first jump in and build a forecast for a client, these settings will first appear. These settings are to ensure that your VAT or your tax is handled correctly. So you just simply put in the fact that it's quarterly, if it's a kind of European VAT registered company. Last day of the VAT return, how many days after you pay, and then 20% tax. So standard stuff, and that'll then just mean that the forecast will automatically handle that VAT. It'll just build up that liability and pay it off 37 days after. These settings here are then just so you can tell the forecast which are your default accounts. So your account receivable could be called trade debtors, for example. So we just simply edit and select the correct one as that. Once that's then done, you won't need to do it again unless those settings change, but you can simply edit them by clicking on the settings button. Once they're finished, you can then jump straight into new, which is where we can then build out some of our forecasts here. So as you might have seen from previous webinars or previous content, or speaking to myself or one of the other account managers, we've got a variety of different ways that you can build out a forecast. Create from scratch is a kind of a blank canvas. Create from CSV import if you want to upload one from CSV from Excel. Create from a copy if you've got one in Futrli and you want to copy it. And we've got the create from last year's actuals, which is a really good way to use last year's trend and then start to manipulate it moving forward. So we're going to be using last year's actuals as a good indication. Obviously, we're going to change them because the world is quite a different place at the moment. And what we're going to do is build out 2 forecasts, as the name suggests this webinar, multiple scenarios, because that's a really good way to then have like a benchmark or like a best case, worst case comparison. We can then use those 2 situations and present out a really nice comparison board and report for that client. So what we're going to do is use the advanced create option from the last year's actuals. So here we can then add in the details of the settings of that forecast, I suppose. So we want to first add the scenario name. So here we can probably call this maybe the best case. The duration, we could do anything up to 10 years if you want to be nice and ambitious. I haven't seen the 10-year forecast done just yet, but by all means give it a go. But in this case, we're going to do just a 1 year. So Obviously, things are changing daily. I think the power of looking at the kind of relative immediate future is probably a little bit more relevant than looking at a really, really long forecast for the situation anyway. We can then change the start date if we need to. So maybe your books are only up to date until May. You could put it back to June. But in this case, we can leave it as July. And then down here, we can apply some blanket changes to our P&L. So for this case, in our best case, we're going to effectively put in some changes that we know has happened to this client. So you probably have spoken to the client before, maybe you've had a quick 10-minute kind of health check phone call with the client just to identify what that person's kind of issues are that they're facing at the moment. So you would have fact-finded, you would have found those issues, and we're then going to build it into this forecast. So we're going to assume that, for example, the client is going to be expecting a 50% reduction in income compared to where they were last year. So, for example, maybe they're a pub owner, and obviously due to the social distancing, they're not going to be able to get as many people into their premise. So maybe that's what they're looking to achieve in maybe their best case. So 50% reduction, 20% tax will be added by default, and we've then got our credit term, which we can leave at 0 for now. You can obviously change it for depending on which client you're working with. If we then click build, that's then going to build out a forecast straight away in only a few seconds, looking at last year's data and moving it forward. And for those that maybe this is the first time looking at this area, just to quickly explain what these numbers are showing. These down here is obviously our profit and loss on our balance sheet. This figure of 106,538, that's last year's figure. So it's July 19's figure, but we've reduced it by 50%. The rest of the P&L is exactly the same as last year. So there's 66,258. That is July 19's figure. Okay. So we've taken last year's P&L, applied it to today's balance sheet, and we've reduced income by 50%. So because we've reduced income by 50%, what we could do is open up income, and we can start to see the individual accounts within there. But because we have changed income, what we want to do is probably change the associated cost of sale as well. So if we open up, for example, a group that's been created here called beverage costs, and we've got beverage cost wedding. So this example company here is obviously in the wedding trade, but because we've reduced income, our cost of sales should probably change as well. So if we change and delete our beverage cost down here, and then remove it entirely. If we now click on the plus next to our beverage cost wedding, we can go to the formula method and we can link it to the beverage income account. So that's now finding that account, the one that we've reduced by 50%, and we're going to times it by maybe 0.2. So we're going to say our cost of sales is 20% of that income account. We've got the 20% tax added by default. We can change the start date, so maybe the invoice date is the end of the month. Is then going to repeat each month. We can apply credit term down the bottom if you want to as well. We're then going to click save. You can now see that pending there. We've now got a nice 20% all the way through there. We can obviously add another stream as well. So maybe in beverage wedding, in that call you had earlier with that client, they're expecting maybe from November time to have an extra client or an extra contract or whatever it is. So we can click on the plus. We can go on the single repeating entry, maybe put in, let's say 2,000 as our repeating invoice. It's going to start, as they said, maybe in November, and it's going to repeat monthly. This time, maybe with a 30-day credit term on there. So that credit term will then change the journals. So we can see there it's now impacting our balance sheet on that 30-day credit term. So that's a three-way working all together. We've got the VAT handled automatically, and we've then got the balance sheet and the P&L all interlinked. So certainly, whenever you add any forecast item into the kind of forecast workings, it isn't just a standalone item. It will affect the full three-way. It's an integrated three-way forecast. Then click save. We'll then see that add there, and we'll then also see everything else change. So we've then got the associated beverage cost has changed by an extra percentages is linked there. So that's one change. We then need to come down and change our opening balance of our accounts receivable. So we put up our current assets. We can then see we've got a outstanding debt here of 1,169,090. So quite a lot of debt outstanding for this client. So in this best case, we're going to say that maybe 100,000 is going to get paid every month for the next 10 or so months. So if we click on the plus next to the account receivable, we can go to the manual journal. We can maybe rename the forecast item. So this could just be called clearing opening balance, for example. We can then, in here, let's say we're going to be transferring 100,000. Is that about enough zeros? Yeah, it is. And we're going to transfer to our current account. If I can locate it. Current account, there we go. It's going to repeat monthly. It's going to repeat every month. And it's going to end after 10 months. So that then reduce that opening balance by 100,000 each month. And it should append and pop up any minute now. Normally it comes in a matter of seconds, so I don't need to. There we go. The joys of doing a live webinar. But yeah, there we go. We've got the 100,000 now just coming off every single month. So that's clear in the opening balance. So in this best case, what we've done, we've gone through, we've reduced income by 50%. We have linked cost of sales, and we've started to clear our opening balance. So some fairly quick and easy assumptions to put in. Obviously, you can add in as much detail as we need to. But I suppose this good method, I suppose, that we're doing is something that's designed to be fairly quick and easy to build out. And it's, but it does hold a lot of importance and a lot of value for that client. It can be a really good conversation starter. So that's our first forecast built out. That's our kind of best case. If we now go back to the forecasting home screen, we open up our 4 scenarios. We can find the one we just built out, the best case. We can click on the 3 little dots and click Quick Duplicate. So as you would think, that's just built out a duplicate, exactly the same, other than the fact we've got copy in the title. But now if we rename this, just call this the worst case, we can start to put in some different assumptions. So what we should do in here is what we've obviously previously done is just simply reduced income by 50%. But maybe they are, for example, sticking in the pub trade, and not deciding they're going to open this month or even next month. Maybe they're going to have a staggered return to the income. So if we open up an account, we can click on Edit. We can then maybe change these 2 months to 0. Quite easy changes. And we then want to maybe come down and maybe put a 45-day credit term. So not only are they going to be not getting any income for those couple of months due to the current issues that that client might be facing, not economically viable in this current kind of social distancing phase, we're going to take that out, and then also their customers are going to pay them a bit later to put a 45-day credit term on. So we can then just quickly go through. We can then amend any of these figures, such as this. So we've taken out that original income, and we're going to apply a credit term to those items. Using the set quick edit options just allows you to quickly do it. You can just type in here as well if you need to. But if you're doing multiple, using these quick edit options is quite a good way. You can also increase, decrease by a percentage using those methods, but we're just using the set selected to now. Then put a 45-day credit term on again. Then just got one more for this category, the venue hire. We're going to change that as well. I'm going to do it that way. Cool. So that's now changed our income. And then what we can do is maybe delay clearing of that opening balance. So that 100,000 we're doing each month, maybe in the worst case, unfortunately, that income is not going to be coming in. That debt that was paid out, or the debt that's been kind of given on the company is not going to be given to them as quickly as that. Maybe, obviously, again, due to the current pandemic, they have agreed a kind of delay on that. So let's say it's going to start a bit later, maybe in December time, and it's then going to continue for 10 months. They'll still get their money back, but it won't be until a lot later. So we'll then probably see in the comparison, what does that mean for that period? Do we need to look to other measures to help them through that period before that debt comes in, for example? Obviously, in addition, we've changed income. We're not getting any income for these next couple of months. How they're going to cope over that summer period. So we can then go in and add, as before, any more assumptions that you need to. But I think we've got a really good starting point here. We've got a best case and a worst case. They're both quite different to last year because we've changed income quite a lot. We've added in the flexes to the opening balances. We can then start to make analysis here, but we don't present the information to the client in this forecasting area. We've got all the information, we've got all of the numbers, but a business owner is probably going to respond a bit better to a interactive live dashboard or a set of management accounts, which you can really put your own touch to. So for that, we're going to jump into the boards here. So again, for those that might be looking at this for the first time, a board is like a live interactive report. And we're going to build a new one here. So a completely fresh blank canvas to work from. If we now call this the model for the new normal. We've now got our board created. We can now add a variety of cards to build that up. So we click add card. Build your own are kind of like starting from scratch ones. And we've got the templates, the profit and loss and balance sheet. So if we select the profit and loss one, we can then scroll down to the profit and loss comparison. So we're going to put a variety of different cards, and it's quite nice to probably have the numbers to back up the charts that we'll put on in a sec. So we'll put profit and loss comparison here. Just going to expand it out a little bit because we'll look at a wider set of data. And here we can then select the correct client. So Real Story Productions. Year versus year means we can look at the last 2 years, but we don't want to do that in this case. In this case, we're looking at those two scenarios. So we've got the best case, and we've got in column 2, the worst case. So those two forecasts we've just built out. Again, now down here, we can change the date settings to be from this calendar month and maybe the following 11 months. So it's going to be the next 12 months, really, is what we're looking at here. Then in the report tab, this is where we can then add anything that we need to this card. Because it's a pre-built template, we've got all of the items of the profit and loss on there. But by all means, you can change the ordering. You can add on a new row, do whatever you need to. But we're going to leave it as the kind of fundamental P&L there. Because it's a profit and loss, we don't want the chart, too many variables really. And we don't want a variance in this case. I just want the nice, it's got 2 columns side by side. Cool, and there we go. We've now got our 2 forecasts compared on the profit and loss as the best case and the worst case then. So we can see how it's going to impact on any of the items of our cost of sales, our income. We can click on presentation mode and really jump into the numbers and see from the top line really what the company is going to be looking like. That's our first card. We're going to click add card again. And this time we're going to click add card to end of board because we want it to be at the bottom because we've started at the top, and do a balance sheet comparison. And for this one, I might just look at 1 month. So maybe just compare this month. So we've got a full 12 months there for a P&L. For this case, I'm going to select the best case and the worst case, because we're having those 2 scenarios modeled alongside each other. And we just want to look at this month. So no previous periods, just this calendar month. Then in the report tab, again, like with the profit and loss, we're going to untick the chart. We just want the table and a balance sheet. If we go to the columns, we might want a pound variance or a percentage variance. We could have both on there, certainly. So let's leave both on and then click done. Cool. So here, we can expand it out. We've got a comparison between the 2, the best case and the worst case. And quite clearly, obviously, the worst case is having a significant impact on the bank and other measures as well. Again, as before, we can open up categories and really start to see what the differences are and engage with that client. So now we've got kind of the fundamentals, P&L and balance sheet, good figures to refer back to. But we can now put in some extra visuals to really kind of add that Futrli touch to, I suppose, and really bring it to life a bit more. So if we click Add Card, we're going to stick with the comparison kind of option because we've got those two forecasts there. We want to be able to see the impact of one to another. What does that mean to the client? Which option should we go with? How can we kind of steer through that kind of two forecasts we've got there? So if we click on the build your own, we're going to use just a standard comparison card. So same as the top two, but it's not a template, so we're going to build it up ourselves. We're going to rename this bank balance. I think it's quite important to maybe see for a client, I'd be quite interested on how much money am I going to have in my bank. So we want to see the differences there. This time we can spend it all the way out. Just want a nice large chart. We can now go to the real story productions, the same client as before. We're going to select the same two, the best case and the worst case. And we're going to have that full 12 months looking at there. Then go to the report tab. We'll see income's added there. It always gets added by default, just so that card can load. But we don't want income, so we're going to add the bank accounts by that. You can also search by clicking on See All, and it'll then bring up everything. You simply just select bank accounts like that. I'm going to delete income this time. Like I said, we don't need that. We're looking at bank accounts. We don't want the table this time because we've got the bank account figures in the balance sheet just above. We've got at the moment the standard default chart being the column. So we want to maybe change this depending on your preference. I think for this case, a spline can work quite nice, just like a smooth line graph. We select that and we then click Done. It will load. There we go. Cool. So now, nice and visually, we can quite clearly see the impact of those two. So as I was mentioning, obviously we've changed quite a lot in the two. What is the biggest concern is really that immediate future. So how can that client, in the worst case, kind of manage potentially going to the overdraft and being in a negative balance? The best case is not looking too bad, but even the best case, I suppose, is kind of worse than where they were previously with reduced income and so forth. So you might even want another forecast built out, and you can build out more scenarios. It really depends on what this is throwing up. But that's a great conversation starter because we can see some good trends in here. And maybe that would be one of the questions is, how does that compare to if I didn't have any changes in my income? I'm expecting even better than that. Let's kind of build that out. This is where building in some really quick and punchy kind of scenarios, things that doesn't take too much of your time, isn't too in depth, it isn't too complicated for the client to then understand. That can then lead to more discussions, more advisory opportunities, and that could then be a more in-depth look at something that your clients then identified. But at least we've then presented them with something that really resonates, and they can start to plan correctly and go from there. That's the balance sheet, well, bank balance rather. What we're going to do now is also add another card underneath this. We're going to add maybe a forecast cash flow. So again, I'm going to select the add card to end of board, and I'm going to select the forecast cash flow here. So it's a template, but we're going to manipulate it a bit. I'm going to expand it all the way out so it fits in that space. I'm then going to select that client again. This time I'm just going to look at forecast data, and because it's not a comparison, I'm just going to look at maybe the worst case. So we are not comparing here, we're just having a close look at the worst case. And maybe because we're just looking at the one, we put in here the subtitle, the worst case. So we exactly know what we're looking at. This calendar month, following 11 periods as before, so just a 12 months. Then in the report tab, I'm just going to change this template around a little bit, just so it looks a bit nicer. Just by turning off the receipts and payments from the chart, we'll still have them in the table. And then the net cash movement, I'm going to put to a spline. So we're going to have two different chart types working over each other. Then on the columns, Because it's just a chronological time frame, there's no comparisons, we don't need a variance. And then we can then click done. Cool. So there is our forecast cash flow, looking at the worst case. So here we can see, again, if I put it under presentation mode, nice way to engage that with the client, because you might be having a meeting over Zoom now, or if you are in the office, you can kind of get this on the projector. And we can see quite nicely the opening and the closing bank in the visual at the top. We've got the net cash movement over as a spline. And we've got the receipts and payments that we can jump into and really engage with that client, see what figures jump out, and really, I suppose, Futrli is the enabler for your discussions. The aim of this is really to put something that's visual that the client can really understand, and then it's, I suppose, over to you guys to really interpret it and find some good solutions that client can really work with. So this just really helps bring that to life, and yeah, that's the forecast cash flow for that worst case. You could certainly build out another one for the best case, and then you could see how the differences are there between the two. But it's sometimes quite nice to have a close look at the worst case so you can plan for the worst and go from there. So, like I mentioned in the beginning, this is like a live dashboard, so you can use it by sharing a screen with the client over Zoom or however you're speaking to them, and it's a nice way to kind of toggle through and bring it to life. You can also get the client to log in, so you can share the board with them, so you can give them their own login, and they could only see this report, for example. So a really nice way. Again, they could just log in each day, each week, or whatever, and just see how they're tracking against that. Or you might have a more of a traditional client, maybe they don't want to log in, they just want the report sent out to them, or you've just chosen to go down that route, which is certainly incredibly popular. I just think the boards at the moment are quite timely because we're able to then kind of engage over Zoom, as maybe a lot of client meetings are having. But if we want it as just a standard PDF, we have the option to print direct from the board. So that's a really quick way to build out a kind of set of management accounts, really. It will print each card on its own separate page. So we're going to look at, after this, how we can then build it into a set of management accounts a bit more effectively. But this is a really quick way, once you've built out a board, to kind of build out a document which you can then simply just right-click, click Save As, and it will then save it as a PDF, which you can email to the client, or you can print it out, or just give it as a handout maybe after a meeting as well. So there's a pretty standard cover sheet. We've then got our P&L comparison. There's a nice kind of table form there. Then got a balance sheet. And you can see there, obviously it's on one card. So when we start to build this into a printer report, we can fill that space. We can put cards on the same page as each other, for example. This is just a really nice way. It's quite clear. Obviously it's quite large. So it makes it maybe a really good way to give a client something that, again, doesn't take too much time. If, however, like I mentioned, let me just move that out of the way, there we go. We want to build it as a set of management accounts, where we might have a chart on one page as well as a table. We can use the print of reports function here. So it's just a list of any print of report that you might have built out. We can go to New Report. You can build one straight from scratch, so you don't need to always build it in a board first. You can just build it from a blank PDF. The only reason why I put it in a board is quite nice, like interactive, like I mentioned, but you can just build it straight from PDF if you have that intention to only send as a PDF. If you have both though, we can import it into a PDF. If we give it a name here, let's call this again model for the new normal. Select our organization, and we can then click confirm. We're now selecting the board to import. So the moment I haven't got it in a folder, so I'm going to put it in unfolded. I'm going to import model for the new normal here. Cool. So now what Futrli kind of does when you import it in, it analyzes how best to position it on each page. So if we now open up that first page, we'll see that it's quite intelligently, I suppose, put the chart at the bottom. We've got two different tables, kind of like we did on the on the board. But we'll see that it's kind of missing off some of the areas. So if we want this sort of layout, we're going to want to change how much data is showing. So here, if we go down to our date range, we can just simply maybe look at maybe the next 5 months or next 3 months. We can then go down to our table cell width. We can then just squeeze that data in just so it fits how we want it to. We then got our balance sheet here, which again, we can just ensure we fit it in however we need to. So we've got all of the data that we want to show there. We can certainly rename things as well. So here in our first imported page, you could call this maybe comparisons, because we're looking certainly on this page at the P&L comparison, our balance sheet comparison, and also the bank balance as well. Hit save on that. And maybe then if we then go into our forecast cash flow, here we can maybe change the layout. So let's put the chart at the top. And then if we copy this, put it down to the bottom, we can then change one into the table by clicking edit and put it into the table there. Because we effectively why I did that is because we imported a card that had both on it. So we import it in and just puts it in as one. So we just simply need to kind of do what I did there by copying it across, change one into a table, and we're then all good to go. And again, I'm just going to do that formatting, the kind of extra formatting that you get with a printed report. It just allows you to, like I said, make sure that full report is kind of a nice finished article and organized however you want to. And here, because we've got forecast cash flow that you can see at the top left of each of these charts as the imported title, I'm going to take those titles out and instead rename the whole page as that by changing imported page to forecast. I can spell it, forecast cash flow, one word or two, I'm not sure. We'll go with one. Cool, that's those 2 pages. And then because we're now completing that as a full set of management accounts, what I do is click on the pre-built pages, and we could use maybe a cover sheet. So this is then obviously a cover sheet, which you can just edit. You can take out the logo. You can put your own logo in by clicking on import image here. If you do white label Futrli as well, you can put your logo there automatically. Everything will be on your brand, the colors and everything. But certainly you can do some text editing anyway in this area. So you can change the title and whatever we need to. We can then reorder that. So let's position that to the front. And we then hit save. Cool. That's now going to just ensure that it's all saved up. And we can then finally click print again. That then export it as a PDF. And we can then again click on that finished article and see that full set of management accounts. There's a bit of a, like I said, a nice way to present that report to a client rather than having each chart on each individual page, which can be good. Obviously, it's quick and efficient. This way allows us to simply have a more kind of traditional and professional, I suppose, management accounts. And certainly what I built here is just a couple pages. You can add as many pages as we need to. But I do think this sort of model for the new normal strategy can be really good in kind of concise chunks. I think keeping it punchy, keeping it on the kind of agenda of the client of their immediate future, that can really open up some more opportunities, some more discussions, and we can kind of take it from there. Certainly you can then build out a more in-depth report off the back of this discussion. But I think maybe for a client that hasn't seen something like this before, maybe you're just introducing it to them for the first time, because certainly a lot of clients have a need for forecasting right now. A lot of clients are in unprecedented times, obviously, so they need to understand how to move forward. So maybe this is the first time they've seen something like this. So I think presenting them something that's quite concise and that is quite visual is something that I've heard has worked quite well from the partners I've worked with. I think the response is good when it's as relevant and kind of on mark, really, because certainly with these couple pages, it then allows you to kind of speak to the client as much as you need to. I think having too much can kind of muddy the water at times. I think that's kind of what I wanted to cover. So obviously we've built out a couple of forecasts. We've reduced income, we've changed the kind of cost of sales, delayed the clearing the opening balances in the worst case, then built them into a really nice comparison. Something that which can be presented as a live dashboard or as a printed report. Really depends on the sort of client you're working with. And this is just an inspiration of what can be built out. I think it's good to have the numbers to back up the visuals, but by all means, the kind of possibilities are almost endless as to what you can add in there. Cool. So I saw a couple of questions come in, so I'll have a look at them. So let's have a look. Cool. So a good couple positive feedback, which is always good to see. A few familiar faces coming through. So yeah, thanks, Mark. I will be sending a copy of this webinar, and yeah, you can kind of read it at leisure whenever you would like to. Great. That's good. Let's have a look at the questions come through. So, how to create rolling forecasts on a quarterly basis in Futrli. So I presume by that you mean just a forecast that updates. Maybe you could maybe use it as a formula. So if you're using a formula that references a previous period, that will just be automatically doing that. On a quarterly basis, you can simply kind of change the time frame as well to a quarterly period. So hopefully that answers that one. Cool. A couple of other questions coming through, which is really good. So yeah, now's a chance. Put them in. Cool. Got a question from Lee. Hi, Lee. Under what conditions would you use the what if link scenario rather than two separate cash flows which are reported on the boards? So the what if scenario is a really good way to, in a way, do similar to what we just did now. But what it does is like create a hard link between the two. So say, for example, you create a budget. You can then create a what if scenario that is a copy from that. But if you then change the budget, that change will come through to that what if you just built out. But if you change the kind of what if, it doesn't come through to the budget. There's a nice way of having that kind of core budget that always will be the expected and will therefore translate to the other what ifs. But if you don't want them like that and you want them to be kind of separate, you can kind of keep them separate. Kind of depends, I suppose, on the item that you're building out. So hopefully that kind of goes some way to explain it. But yeah, they're quite similar. It's just, do you want them to be kind of intrinsically linked, or do you just want them to be kind of separate? Cool. Kind of those two have gone. And another question, can you create management accounts for category options from zero? So by that, I presume you mean like income and expenses and so forth. So I think we went through that a little bit in the kind of set of management accounts that we built out, which is a kind of a printed report that looks at P&L categories. So I think that's what you mean. If you could maybe elaborate, Charles, that would be good. But yeah, from what I understand, the category options, it's just simply like the area that holds the accounts. So I believe that yes is the answer, and it's just simply the chart of accounts that pull through. I think they mean tracking categories. Thanks, Brian. So yes, you can build out reports that show tracking categories. You simply just either use a tracking card. So that then allows you to click on which tracking option you're then building out, and you can then compare them. Or if you're looking at a profit and loss, for example, and you've got it all tracked, you just apply the tracking to the P&L, and that'll then update the figures. So yeah, certainly either apply the tracking code to a card to have a look at that individual item, or if you want them compared against each other, like you might have salespeople, for example, you want to use a tracking card, and you can then kind of compare them. So cool, joint effort, I think we got there. Let me answer both of them. Cool, thanks, Charles. Great, just answering these, they're gone. Good. So we've got a question from Todd. Thanks, Todd. Do we have the ability to use two different methods to forecast P&L and balance sheet accounts? For example, use on the fly for specific periods and a formula for later periods. So yes, the way you would achieve that is by doing two forecast rows, really. So you'd have one that would end after a particular period. So when you add a forecast item by default, it will just continue until the end of the forecast. But in that case, you would end it at a specific date just by selecting the kind of end at date, and then add another forecast row for on the fly method, for example, starting when that ended and finishing when you need to. And then, yeah, when you present it, we've got that kind of shown nicely as a linear line. Cool. So I think that hopefully answered that one, Todd. And Lisa's asked, can you change colors on the PDF reports? So yes, you can. So that'll be as part of our white labeling service. And it is an additional service, but it's a kind of full white labeling service. So we change every color in all the charts to reflect your brand. So we'd effectively ask for your kind of brand colors and so forth. Your logo and such like would be then put onto your report. Your URL, your kind of domain name, is then changed as well. So rather than it being app.futrli.com, it'd be the name of your firm, for example, if you want to go with it. Or in my case, it'd be like stokecity.futrli.com, as I'm a sad Stoke City fan. So yeah, by all means, you can change them all. Just get in touch with us if that's something of interest, and I'm sure your account manager will be happy to kind of go through what's required for that. Cool. Great, that's pretty much all the questions we've had, I believe. So like I said, I will send out the recording. I'll send it out as soon as Zoom gives me the ability to do so. I will also, that's in the account management team, I'm going to put together a bit of a guide per session that we do of these, which are happening every Thursday at 4 o'clock. Next week's session is on, let me just remind myself, let's have a little look, how to configure alerts to spark conversations. It's a really good way to be proactive and use alerts. So yeah, we're going to send out a load of help material, the recording, a little guide as well, so you can have a step-by-step kind of analysis on what we did today. And obviously, if you've got any other questions that you might have had from looking through the material or from me, then by all means, just certainly give me a shout. You've got myself, the account management team, and obviously our support team as well via the in-app chat window or support@futrli.com. So cool. I think that was useful. Well, I hope that was useful, rather, not I think. I'm sure you'll tell me if it's not. And I hope to speak to you again next week on Thursday. Thanks a lot, then, guys. Have a good afternoon.